Hi friends. Hi friends. In this video, we will try to analyze Bank Nifty 5-minute spot chart. What has happened yesterday, what has happened today, and how to identify potential trade opportunities. Now, yesterday many predicted that the market would fall since in the last 2 hours sellers have came to picture and tried to pull the market down in this vector, and we have buyers who are adamant, who did not give up, and they were continuously keeping lows higher. So which of them are going to win? So in such case, the best way to play such market phenomena is to play on both sides. That means we enter trade here with a stop loss above this high, we enter trade here with a stop loss below this low. So one of them is definitely going to win, and they will win with a huge margin. This is called the concept of game theory. You play on both sides so that one will win with huge margins, so that the loss you make on one side will compensate greatly on the other side. So given that note, today markets have opened with gap up, and we'll see how to identify such potential trade opportunities. Clearly, these are the lows that has formed yesterday. This is adjacent vectors, alternative vectors. What we'll do is we'll try to mark simple. We try to draw a pitchfork between the last major high lows. This initially doesn't make much sense, but we use the concept of frequency shifting at the bottom, because price is not respecting the low, but it is wavering somewhere around above the low. In such case, we draw a parallel line to the pitchfork and keep it to the lowest lows connecting. Can you see that here? Price is respecting these lines like it is a almost very surprising notice. Okay, and also given that market has opened above this pitchfork and then has clearly respected this line, we can, with this very powerful bias coming into picture, we can expect that the price may hit this high. Okay, now according to Newton's third law, every action has equal and opposite reaction, which means a shift in frequency of price at the bottom of the pitchfork may reflect at the high of the pitchfork with almost the same wavelength. That is what you can see here. Price definitely respecting this zone, because the shift you can see here is observed at this level. Now, how do we identify trade opportunities here? Let me show you. Now, this is the clean market picture. To make things clear for you, I'll remove the entire pitchfork and then see how we can trade just this line. Now, can we enter trades in any of these zones? Definitely not, because we have a strong stop loss here. However, which is very long. So, however, if we carefully look into market, we can observe this candle and draw a bottom line to that. So every time price poke that level, okay, it didn't close, but it is keeping on poking. So this is the notion that the market makers who push the market up to this level are now playing their games again. This is like, whenever the market goes down, retail breakout traders might want to enter into sell stop orders at this level, and taking that opportunity, the market makers will enter the market with huge lumps of money. No, the quantities which we can't even imagine. So all these poking lines are just what market makers entering and re-entering these positions. So the last poke is this candle. This is the last poke, and what we call this line as wash line. Wash line is because the name is also very absolute, because the retail breakout traders, sellers at this level, and wash out with these two levels, and so is the name. Now, we also have a slope washout line in these vectors. Okay, so price is clearly respecting these two levels and giving an insert candle in this green bar. So this is an indication that it is now the time for market makers to go up. We have entered trade exactly at this level, when after this red candle, This green candle is this when this before it formed, when it touched this level, we entered buy position with the stop loss here, and then you can see a huge run like this. Now, if someone have missed this opportunity, they certainly have got another opportunity trading at these levels. Let me show you how. Now, at times price does not reach this normal supply or demand zones. This is the general inward frequency line, which we can expect price to come back every time it marks a move up. But this time price didn't do that. So what it did instead is it just tried to poke a small micro supply zone in this zone. I'm sorry. I have drawn this line specifically because these are the lines which were temporarily created by praxeological elements. When I say praxeological, intentionally created movements taking this high. As you can see, price just touched that high and then created an inside bar. So this is a notion again for us to enter the market here. When it poked this level and created an inside candle, this again is an indication for us to enter market. And with that concept, we need to add a further layer of uh, line work to confirm this context. What we do is this slope reversed line, we extrapolate it to the inward frequency line, which was respecting earlier. Price is almost touching that line. There is one signal for us to indication for us to enter this market, but that is not sufficient because we have sellers coming very sharply, and people might be wondering if this goes further down. So to make things clear, we add further line book with the latest highs. I'll mark them in, say, blue color, and then we extrapolate that line to the latest low. Okay. At times, when the high is not respecting, the next low can make the things better. So we place the line here, and then price is again clearly respecting these lines. So this gives us a double confirmation to re-enter market. And the third nail in the coffin is this outward candle, which has clearly broken the high of this candle, which we call as dynamic frequency breakout. So this is a clear indication for us to go long after this candle. Mark it here. So this is the entry. No matter when we enter, the stop loss is again at the low of this uh, candle, because we don't know price may again take a turn back and then touch any of these levels. So keeping a good stop loss is also very important. Now with this note, we draw a pitchfork to confirm if our lines are clear. Already the line which I have drawn is making sense at highs, but to be more precise, we draw a width pitchfork. When I say width pitchfork, it means that taking the latest high, lows, and then keeping here. So if someone has missed this opportunity of entering, this is the re-entry point. The touch of this line has opened with a strong bullish candle, overtaking many other highs of the other candle. So this is the third entry again. See how market is getting multiple opportunities to enter and re-enter market. Now, amazingly, the high of this candle has touched and produced a a bearish fractal bar. This is the power of geometry, guys, and this is the power of knowing the way how the flows between a relationship between buyers and sellers happen, and how do we make use of certain tools to confirm the context with the technique. So with this, I'm signing off, but before signing off, I want to let you know that we offer training on price action strategies and market maker strategy. We also train on fractal post strategy. We combine multiple of these uh, theories and concepts and then enter trades. And so our accuracy of entering such trades is very high, and then we make very very, very long risk to reward ratio. Okay, so keeping it in mind, please ping me if you are looking for any tradings in these aspects. Thank you.